CNBC-TV18 presents the AI Dialogues in association with IBM.
Dinesh, at IBM, you guys make it simpler for the bankers, or you empower the bankers to reach their decisions. Now, our panel has raised several issues.
Absolutely.
Customer satisfaction, customer identification, mule identification. Where does IBM fit in? How do you make it easier for these guys?
So firstly, AI, as it integrates into every part of the business, it presents both significant opportunities, but it also casts significant responsibilities on people who are using it. Trust, fairness, a lot of other aspects. And there are a lot of views which were shared today in terms of people having to be cautiously optimistic, and that's really what RBI is told. In fact, the governor had recently said that you need to be cautiously optimistic. And that's fair, I think, and that probably goes to also a couple of other points made in terms of what are the use cases? Where do you test this, right? Probably you start using this in areas which are low risk, right? So probably start from there, and I think a lot of that has been done. For instance, in the HR space, I think a lot of work has been done. Now, once that's done, RBI also has said that there are other places that we could probably use AI, and rightly pointed so in terms of the cyber security related issues, anti-money laundering, KYC, a lot of use cases which have been identified by the RBI themselves in terms of where we could use. And also what this really comes down to, and we're talking about really important industry, right? It's not general use of AI. We're talking about a financial industry, and therefore we need to be a lot more aware of what AI are we using, right? Was it responsibly built? How was it trained? A lot of these aspects go into so that you can stand behind it as the chief risk officer, chief digital officer, CIOs, and so on and so forth, that yes, we've used a trusted AI to really benefit our organization, both and clients.
You know, at the moment, there is a lot of conversation that you don't have to have collateral lending. You can have cash flow lending. So is there enough technology available for bankers to on the ball guess whether, cash flow lending at what point is perhaps it could become a bad loan? Is that much available?
Yes, I think there is enough information available in the market, right? Data, they say, is oil,
Yes.
right? But I call data as crude oil.
Oh.
Crude oil on its own
Super.
can't do anything.
Okay.
It needs to be segregated, needs to be cleaned up, needs to be refined. So a lot of data which is available on you, me, and everybody in the market, which you can call it as alternate data, or you can just say it's a cash flow based data. If you use the data sensibly, you will be able to identify, is this customer likely to default and pay me my EMI?
No.
The simple rules which are earlier was what is he paying to me and what is he paying to others. But things have gone beyond that, right? We use apps. Apps allow you to get additional information of the customer, and there is other information on what kind of social life he's living, and there is enough service providers on that front.
Yes.
On what he's doing with his money. Those things help you on the collection front as well. When you see too much of spend happening on that customer, maybe you need to understand now just putting him on a call center when a bounce happens is not good enough. You need to be standing in front of him. If his salary is on 3rd and the bounce happens on 3rd, I need to be standing in front of him on 4th to collect the EMI. If I'm not there, all likelihood, he will just use the money away.
Oh, excellent. Okay, so that really brings home the point. You want to add to that, Amit?
Not just in the retail side, but if you look at the SME segment, which is a large portion of where you don't have publicly available information, the whole early warning signal models and AI there in terms of both internal data mining and external information becomes a very good source to kind of ensure that we can, one, either exit, reduce exposure, or exit an account completely. So, from a customer point of view, you're also ensuring that there's churn in the account. You're ensuring if there's any unusual transactions, related party transactions, because those are really the first signs of trouble. So your models need to pick up some of that, and that's where AI also helps us in those models in terms of early warning signals.
So it actually makes
It does
cash
make
flow lending possible because of the tools available. Yogesh, I wanted to ask you, in Kotak Mahindra, you also have the advantage of being a group,
Right.
With multiple companies giving you information about your customers. Are you able to therefore make products more precise? You have a stream of customers from securities, from mutual fund. Are you better able to integrate?
I think that's again, it's a step-by-step process. First, and the foundational aspect is about knowing your customers, for which you need to have a unified data, platforms, so that you can really understand who is this customer, what kind of life they live, are they riverboat traders. See, once you understand different personas, then you can say, okay, these are globetrotters. The travel credit card is more relevant for them. If they are riverboat traders, so a demat account or a wealth management solution is going to be more relevant. First, you know your customer, then show your customers, and then if you understand, then you can say, okay, do they have higher affinity towards digital or versus assisted channels? So you kind of guide them through both.
Now, Dinesh, I wanted to ask you, these gentlemen have given me a range of use cases. IBM obviously services globally. Are there use cases not yet prevalent in India which IBM can bring?
So probably I can use Europe as the example. So we have a cloud which is ready for the financial sector, but again, the market was ready for that. Now the sentiments and the guidance, the laws as well, is still evolving in India. As much as the financial institutions are cautiously optimistic and we want to go along with the journey, we are also kind of trying to see how do we build, how do we cater, what are the financial institutions, and we're actually working very closely with financial institutions to understand where do they really want to get, right? So what really helps is doing POCs and helping them understand identify what are those use cases which are relevant, which is not necessarily a lift and shift from what we've done in Europe. So I think that's the journey that we're building on. But we do see a lot of good traction, and hopefully the regulation and the use cases, all of them come together to build a stronger story for India.
Okay, so on regulation, let me take off on that issue, because a big regulation is just waiting to happen. The DPDP Act has been passed, but its start date has not yet been mentioned by the government.
CNBC-TV18 presents the AI Dialogues in association with IBM.